Tell me who you are and why should people stop the scroll and pay attention to what Derick has to say today.
Absolutely. My name is Derick Gakuo. I consider myself a very passionate innovation expert and a fintech, senior fintech expert. I spent 7 years in the tech space. I started in telecoms. And then I got into the startup space. And that period of the startup space also really, supplemented my experience as a global thinker, in that I was exposed to around 25 countries globally. Think about spectrum, mature tech ecosystems and less mature tech ecosystems, Asia, US, America, Africa. And, it really helped me see what's happening in the world of tech and how the rest of the world is preparing for the next revolution. After that period, I spent 3 years in the fintech space. I was part of the founding team of one of the, payment companies of 2024, 2025. It was one of the most exciting in the market. We got to around 500,000 customers in less than 5 months.
Damn.
And
That's incredible.
Yeah. So, and while I was building that platform, as an example, there's part of the platform, that we build in a different market, that is India. And of course, when you're building platforms that scale, it exposes you to the back end that really enables all this happen, right? So I think those 3 years is when I really got very close to understand the world of data centers, digital infrastructure, data connectivity, and now, GPUs, right? And of course, the financial services is one of the most heavily regulated in Kenya. And of course, the regulation and the ecosystem has some requirements around financial services that, they need to host personal data inside the country. So think of it like GDPR. Need to host the data inside the country. So it means whatever the server that is processing that data should be residing inside Kenya, right? Secondly, of course, as you try to comply with the residing your data and processing inside the country, then you're faced with the challenges of the cost of infrastructure. Okay, so that experience really showed me the gaps in the digital infrastructure space. So as an example, infra as a Capex is very expensive for technology companies. So most of them end up not complying. And what I mean by not complying is that they end up hosting their workloads on the likes of AWS, Google Cloud, Microsoft Azure, who do not have their data center sitting in Kenya. So you see that already is a tricky or a bloodline in terms of compliance. And, so I asked myself, okay, why are there no companies in Kenya that are offering, enterprise grade cloud solutions like AWS and the Google Cloud? Why don't we have a Kenyan version of AWS? And the answer was very simple. It is a capital flow problem, right? While AWS is looking to do $10 billion in the Kenyan market, does a Kenyan cloud company have the access to the same resources? And the answer is no, right? And capital flow is also an element of capital priority, right? So as an example, if you look at how the world has been moving, we started with the agrarian revolution, and during the agrarian revolution, there was a lot of scramble for land. So the land was the primary resource. People were buying and investing in and making it productive. We moved into the industrial age, and that's the time of oil and all this, and you can see what was happening across the world with colonization and the wars and whatnot. Then we got the third industrial revolution, which was very heavy on telecoms, right? So that's when you see the big companies, the big tech companies of today, Safaricom, Airtel, all these are telecom infrastructure companies, and there you have the telecom towers and whatnot. Now we are in a different phase, which is the fourth industrial revolution. And this is all about robotics, data, artificial intelligence, like blurring the physical and the digital world. Now, the real estate behind this new industry is very different. It's not tower infrastructure, it's not land, it is not oil, it is not machines. It is actually digital infrastructure. In simple words, data centers, compute GPUs, compute high-performance servers, and ISPs that enable that data to flow for you. So in simple terms, how I define digital infrastructure is while roads move people and goods, digital infrastructure moves your data.
Thank you so much, Derick.
Thank you.
Joining Derick is, I like how he mentioned capital flow, is the money. Not that Derick doesn't have money, but I mean the money. I like that you brought your money partner here. Bwana Eric, please introduce yourself, say hi, and why should I listen to Eric? Who are you and why should I care?
Thank you again, Ivy, for the humble introduction. My name is Eric Renji. I've been in the capital market and ecosystem for the last 22 years. I've worked for several investment banks, big ones, just namely Standard Investment, Renaissance Capital, SPG, Sterling Capital, which I set it up from startup many years ago. And just recently, last month in October, I was able to secure my own now. It's called a brokerage firm called Kestrel Capital. So I'm one of the owners of Kestrel Capital. You can look it up on LinkedIn and whatnot. It was the first management buyout in the Kenyan capital market space. So it was an exciting time for us. And before the acquisition last month, early on this year, I was able to set up my own fund management. So I'm the founder and the CEO of Tradeium Investment Services Limited, which will be working closely with Derick. Okay. Yeah, and with that, the idea that I've always been thinking about has always been, I need to be different. I cannot be asking for a seat in the table. Let me own the table. So in a nutshell, I own an investment bank or a brokerage firm, and a fund management. So those are two different licenses that are regulated by the Capital Markets Authority. And currently, with what we are seeing with the CISs, that's the collective investment schemes, they have been doing really well. Quarter on quarter, we've been doing over 100 billion. And that clearly shows that there's a lot of money out there. So just thinking about what my good friend here is asking for, he's asking for capital. And I think Kenya has the capital base to be able to finance him in the infra of what he's looking for. Yes.
Okay,
Thank
lovely. First management buyout. Sorry, Eric. What does that mean? What's a management buyout? Why is it the first in 2025? Sounds like we're late.
It's not just 2025 in the capital market space. So what used to happen, or what has been happening, is that there's brokerage firms, there's fund management firms, and it has never happened that a staff within the firm went and bought the firm. It has always been the firm has either been sold 100% to somebody new, or has closed down, or is existing, but because of the transition of the generations, maybe from father to son or father to daughter. We have a few examples. So this one became quite unique because the CEO of Kestrel Capital, Francis, and myself, we worked together. And when we talked sometime back last year, we set up an agenda to say, we have been in this space for the last 20 plus years. There's no way we are going to stop what we are doing or what we know and start going to farm. Why don't we acquire a business? And from his end, the owners of the business were willing to sell. But then now, the problem is we were competing with other interested institutions. And hold and behold, it was not an easy acquisition. We are competing with a global investment bank that actually did an IPO to raise funds to acquire the business. So sometimes we pat ourselves in the back when we say we outsmarted an international firm. So that's the reason you need to hear me out, because I was able to outsmart an international firm.
Good job, good job. So even when should we be clapping now or after you? But you bought a profitable firm.
Yes. So
you're
again,
okay.
Yeah. So just also to give context in that management buyout.
Yeah.
So we acquired the business as is, as a going concern, with all the staff. And it's a profitable business. It's a business that has been in existence for the last 30 years. Actually, it's the pioneer investment bank and the stock brokerage that brought in research in Kenya. It was set up in 1995 by one of the founders of, we can call it, the capital market.
Yeah.
And he set up a research firm.
Yeah.
He actually used to work in the New York Wall Street. And when he moved into Kenya, the idea was, let me set up something that I love doing. And when he set it up, he used to ask people, why should I buy these shares? And people would say, because the price went up.
Yeah.
And he realized there's a gap. The Kenyan space is not able to comprehend research. So he went and set up the first research department. And going forward, he targeted foreigners. Around the 1995 going to 2000, there was a lot of frontier market appetite. And what happened was foreigners started coming into Africa, into Kenya. And he was the first person to be able to give them good service because of the research. And from his experience in the Wall Street, he was able to execute using the SI unit of the international trading practice, best trading practice. Yeah. So it became a pioneer in that space of the Nairobi Securities Exchange.
Okay.
And it's been a member for the last 30 years. We just celebrated 30 years. And while doing so, that's the same time also the management buyout happened.
Okay.
Yes.
Good. Congratulations.
Thank you. Thank you. Yeah.
All right. The Kenyan market cannot comprehend research. Are we doing better? Because now I want to go to Derick. And you said you've moved in. Data centers are changing the world. And they're changing economies. And I want to get in as Ivy. And I'm sure a lot of my viewers also want to get in. Where do I start? I think start by, what does a data center do for me as Ivy who interacts with a phone or a laptop or an iPad on a day-to-day? What is it? What are we looking at here?
Absolutely. So maybe I'll start by my company.
Yeah.
So I'm the co-founder of a company called Ciscom Technologies.
Ciscom.
So Ciscom Technologies is a cloud, data, and AI company. One of the things that we do is that we develop the data and AI infrastructure that powers businesses that want to run solutions in cloud, or businesses that have early instances for agentic AI and those type of applications. So why we went for this within the ecosystem is that we want to be the real estate owners and the people that power these businesses. Because ideally, if we don't exist, it means, so let's say Ivy Core, let's say it's an investment bank, right? You'd need to burn a lot of money in Capex, trying to build your own data center or trying to invest your own high performance servers, your own AI GPUs. Then you're trying to manage something that has nothing to do with your business. So we help you focus on your core business, which is serving customers with investment products, while we, provide all this, infrastructure as a service to you. So it becomes an Opex on your end instead of being a Capex. Now the excitement now then becomes that now we have invited, or we are thinking of innovative solutions with the likes of Tradeium Capital to be able to invite investors to be part of the supply side. So investing directly into this compute. Now, just to paint for you a picture of what this means. The US, which is the market leader globally, has 5,000 data centers. Okay, Kenya has less than 5 private data centers. So you can just see the gap. I was in Hong Kong in April, and such a small market, I think 6.5 million people, has 122 data centers. Okay, so what are data centers? Data centers are the data warehouses where data is stored, right? So think of it this way: if you have a video on your phone and you upload to Google now is your Cisco. They're the ones that stores that data for you, and they charge you for it, a small fee on the Google Drive, right? Then apart from just, hosting or warehousing that data, there's an element of data processing. Mm-hmm. So processing is where our applications come in. Mm-hmm. So let's say your digital bank is processing a data to return to you a request, right? And then there's transmission. So transmission is when you're on your phone and you're requesting something on your bank, your ISP, who is probably Safaricom, Zuku, is carrying that request to the data center. It is fulfilled, then returns you a response. So that response can be, okay, send a message, send a WhatsApp message. Your carrier carries that, it's processed inside a data center, and then returns you a successful request, which is okay, it has been completed, right? So the closer these data centers are to you, the consumer, the faster the speeds, the better the experience, and the easier we are able to comply with the data protection laws. So you can think of it this way. A Google data center sits in California. So every time you're doing something on Google, your request is actually going all the way to California, or maybe a CDN in Abu Dhabi or a CDN in South Africa, then comes back to you. But if it's sitting in Nairobi, you can imagine the speeds. So this is some of the opportunities we are looking at Ciscom. So now the reality, and this is numbers that are there on the Communications Authority website, the demand for cloud and AI infrastructure, so data centers, high performance compute, and now GPUs in Kenya as of today is valued at $1 billion. So that is roughly 130 billion Kenya shillings. That is unmet demand, right? And, while Eric will say capital is flowing, this capital is flowing into other industries other than technology. And if you look at the numbers globally, today, technology is the highest ROI industry, I think 18 to 25% according to Forbes. And specifically in areas of semiconductor, you can look at NVIDIA, it's a chip manufacturer. You can look at Oracle, it's a data center company. So Ciscom is an Oracle of sorts, right? You can look at the XAI and these companies, right? So then financial healthcare is the second industry. I think it returns 15 to 20%. Financial services, 12%, 15%. Real estate is 18 to 12%. So, our question has always been, and this is how we really got synergy with Eric. I told him, why are Kenyan investors not getting exposure to this investment class that is the most exciting? We use our phones all the time. We're always on our phones. We are always downloading apps. We're always doing digital transactions. The world is aggressively, digitizing. So that was a question. How can we start to give investors exposure to these asset classes? And technology is huge, but the most stable asset class in technology is actually the real estate, the physical infrastructure that powers that technology. And that is data centers, fiber cables, internet infrastructure, towers, compute, and GPUs. And maybe just to finalize now how we, break it down all the way so that you as IV can get exposure into this. So we are demand first, okay? So we source for demand. So we go in the market and ask companies that have the demand for cloud compute, the demand for AI GPUs. We ask them, what is your projected demand over the next 5 years, right? So we aggregate that demand, and as of today, over the next 5 years, we have aggregated demand of around $5 million, $1.25 million in high performance compute. So think about our servers, around 1.75 in storage.
This is Kenya only.
Yeah, Kenya only in storage compute, and $2 million in AI infrastructure. And then next year we are partnering with some modular data center, developers, to understand now the demand in that area. So if you look at $5 million as part of the 1 billion demand according to the CA, it's a small fraction. So you see now this $5 million as guaranteed demand is then what will come and sell out as an investment opportunity. Okay, so and we have done this. We did it privately, so we are doing private placements within our networks, and we're able to cluster up the first computes of around 500K. Just by selling it privately to our friends, to people within the network. So now with Eric and working very hard with fund manager, we are looking at now taking this to the next level, increasing participation in a compliant, regulated, and sustainable way. You can own a server, right? It's very, very straightforward, model. You own a server. It's like the way you'll own an apartment. A business, an SME that needs to utilize that server, sits on that server, pays every month. Okay. So there's recurring revenue. Okay. So they pay lease, rent, revenue to sit on that server. They have a guaranteed leaseholds over at least 5 years. Okay, and because of IT is also very obsolete. So the server starts to become obsolete year 6, year 7. But for 5 years, we have guaranteed leaseholds on that server. So we have a supply side, then we have the demand side who meet together and exchange value. So now the problem then we solve there becomes that you, as an individual investor in the Ciscom ecosystem or the Ciscom cluster, you're able to supply a small business that is a technology small business, an ERP hosting company, a web hosting company. You're able to give them your machine. They sit on it, right? They pay every month. and then this revenue share, because then there's managed infrastructure in between, power, because they consume a lot of power. There's internet, right? Then there's operations involved in that server.
Or Ciscom is like a landlord.
Yes, like an agent.
You're an agent.
Yes,
so
you
you
are
don't
an
own.
agent. We don't own the infrastructure. The
You're like
infrastructure is
Uber
of investors.
for.
Perfect.
Okay.
We are the Uber of digital infrastructure.
Okay.
So we have suppliers who buy and own servers. They dedicate to our platform. On the other side, we guarantee that customers will sit on that infrastructure, generating income. Then there's rev share.
Okay, so where does Eric come in? Where do you come into this value chain?
I think in an easier term, I'll be the platform for people to access
Yes.
his ride.
Okay.
Yes.
My guy. Yes, that's how it should be. Okay, fine.
Yeah.
So how much do I need to how much do I need to get in? How do I even end up how do I know that Ciscom is the best? Why should I do this really? And what is it going to cost me?
So before Rick goes, it's very important for me to highlight what you just said.
Yeah.
So Oracle is a 20-year-old company. Okay. So if you buy an Oracle share, you are, I think, CD in terms of shares. Like you have no direct control and you have no direct benefits in that company. So think of Ciscom as an Oracle that is building from today for the next phase.
Okay.
Right. And for the future. And that is Kenyan that is setting up its clusters in Kenya, enabling Kenyans to be compliant with data protection, pushing for data sovereignty, because data sovereignty is very important. Data sovereignty is where does our data reside? Because who controls that data has a lot of control on us. The data has to reside inside the country. I need to know that, okay, my personal bank transactional data sits somewhere on Mombasa Road, not in California, because then I don't know what that company is driving, the intelligence is driving from that. The people that invested in Oracle infrastructure directly, they raised $1 billion, $100 billion just the other time, and they co-invested $500 billion with the SoftBank into what they call there's a big data center they are building in Texas to power OpenAI. Okay, so now the people that invest in those companies are hedge funds and the big private capital in the US, right, that is already has appetite for tech. So what we are saying that we don't have the big hedge funds in Kenya, how can we empower Ivy to be a hedge fund and invest in this, invest in this new asset class? Now, when you invest, we cluster up the infrastructure, and Kenyan versions of OpenAI, Kenyan versions of Safaricom, Kenyan versions of the big data bricks, the big data companies, the web hosting companies now have an opportunity to sit on the very infrastructure that is local, generate value for local people in Kenya shillings. So now the companies don't need to pay in dollars to AWS; they can pay in Kenya shilling because they know that it's Kenyans that are supplying them with that real estate. So currently, minimum entry, because it's still very private placement, minimum entry is like $20,000, which is a full compute cluster. But now whatever we are innovating with Tradeium Capital will enable people to have exposure from as low as $1,000, $500. So just democratizing investment in that space.
Eric, you're saying?
Yeah. So I like what Derick has just said. There's the initial $20,000, but where I come in is to get now people to invest the $1,000. Let me give you a good example. Just recently, the NSE changed the rules that you can be able to now buy one share or two shares, a single share. Initially, it was in batches of 100. Yes. So now for Derick, when it comes, he wants now to be able to make it easier for the mwananchi to be able to buy. But I'm also putting in something, so like a sweetener. I want to package that product. Also, we'll be able to sell it to the pension funds, to the high net worth, to anybody who has the muscle and maybe is over securitized or is over invested in the bonds, treasury bills, and so forth. So we are just trying to get them to give them an extra or a different investment class or a different investment product just to add on to. Because right now there's this thing we are calling special funds. why have they become so famous in the last 5 years? Is because historically it has always been you're either investing in the local stocks, the bonds, and maybe cash at hand or cash in the bank. But now we are saying we need to capture what AI is offering, what has already succeeded in other countries, and package it for the Kenyan. So I'm coming in and I'm saying I'm going to stand in between Derick and the client and package something that has to be approved by CMA. So I'll make sure that I work within the confines of CMA so that he can be part and parcel of that investment asset.
Okay.
Yes.
Good.